My topic is on tax havens. A country that offers foreign individuals and businesses little or no tax liability in a politically and economically stable environment is called a tax haven. Tax havens also provide little or no financial information to foreign tax authorities. Individuals and businesses that do not reside in a tax haven can take advantage of these countries' tax regimes to avoid paying taxes in their home countries. Tax havens do not require that an individual reside in that country in order to benefit from its tax havens. List of income tax free countries is dominated by Middle Eastern or tropical tourist destinations that rely on essentially two factors to help generate revenue, and these factors are oil and gas revenue and tourism. In many cases, however, oil and gas revenue and tourism aren't enough to keep the economic hamster on its wheel. Although these countries don't directly tax their citizens with an income tax, there are other forms of revenue collection. The local people will not agree to work at a lower wage rate. Therefore, foreign people comes to other countries and work. Therefore, this is the third reason why there is a rising number of foreign workers. These are the top 10 biggest tax haven countries in the world, which have Switzerland as the first one. These are the other tax haven countries all over the world. Characteristics. Individuals or corporate entities can find it attractive to establish subsidies or move themselves to areas with reduced or nil taxation levels relative to typical international taxation. This creates a situation of tax competition among governments. Different jurisdictions tend to be havens for different types of taxes and for different categories of people or companies. OECD, Organization for Economic Cooperation and Development. The three key factors in considering whether a country is a tax haven or not are: first, nil or only nominal taxes. Tax havens impose nil or only nominal taxes and offer themselves a place to be used by non-residents to escape high taxes in their country of residence. Second, protection of personal in financial information. Tax havens typically have laws or administrative practices under which businesses and individuals can benefit from strict rules and other protections against scrutiny by foreign tax authorities. Third, lack of transparency. A lack of transparency is the operation of the legislative, legal, or administrative provisions of other factors used to identify tax havens. Money and exchange control. Most tax havens have a double monetary control system which distinguish residents from non-residents as well as foreign currency from the domestic one. In general, residents are subject to monetary control but non-residents are not. A company belonging to a non-resident when trading overseas is seen as non-resident in terms of exchange control. It is possible for a foreigner to create a company in a tax haven to trade internationally. The company's operations will not be subject to exchange control as long as it uses foreign currencies to trade outside the tax haven. Tax havens usually have currency easily convertible or linked to currencies like US dollars, euro or pounds. Incentives for becoming tax havens. There are several reasons for a nation to become a tax haven. Some nations may find they do not need to charge as much as some industrialized country in order for them to be earning sufficient income from their annual budgets. Some may offer a lower tax rate to large corporations in exchange for the companies locating a division of their company in the host country and employing some of the local population. And the third may be that other domicile find this is a way to encourage conglomerates from industrialized nations to transfer needed skills to the local population. Lost tax revenue. The Tax Justice Network estimated that global tax revenue lost in 2012 to tax havens is between USD 190 billion and 255 billion every year, and $21 trillion to $32 trillion is hidden in tax havens worldwide. The Tax Justice Network reports says that the system is basically designed and operated by a group of highly paid specialists from the world's largest private banks, law offices and accounting firms. Regulation measures. To avoid tax competition, many high tax jurisdictions have enacted legislations to counter the sheltering potential of tax havens, also becoming increasingly popular as forced disclosure of tax mitigation schemes. Broadly, these involve the tax authorities compelling tax advisors to reveal details of the scheme so that the loopholes can be closed during the following tax year. This is the video which
This is Peter.
shows
Injustice
some
drives
of the
him
information
nuts.
about tax
It
havens.
annoys him that international companies and wealthy individuals are able to use tax havens to hide their money from the state. But how do they get away with it? Every company is liable for tax according to where it's based. However, tax rates in home countries tend to be extremely high. The alternative, tax havens. That's countries with very low or no tax rates at all. When a company establishes a subsidiary, their income in the tax haven is virtually tax-free. Therefore, the company doesn't want revenue to arise from HQ but from the subsidiary, allowing them to save a great deal of money. To achieve this, the company transfers its trademark rights to the subsidiary. The parent company pays licensing fees for this, which helps reduce its own earnings and, in turn, also the tax burden. At the same time, revenue is generated in the tax haven on which the company pays barely any tax. These subsidiaries generally only exist on paper. They're so-called letterbox companies. There are neither any people working in these locations, nor are there any offices. Indeed, several hundred companies may even be registered in some buildings. They are all bogus companies created to help save taxes. Private individuals also use tax havens. They make a tax haven their place of residence, for example, entirely legal as long as people actually live there. Those at home can open a bank account and do business abroad as well. All they have to do is report the revenue in their home country. Otherwise, this is evasion and a crime. But what about
Thank you.